When you're selling a property, most people think you're only required to pay taxes on capital gains. I get this all the time. But you might be surprised when you get the bill from the IRS and see what you actually owe. This is one of the reasons why 1031 exchanges have gotten so popular. They defer more than just capital gains. Let's get into it. Well, you've got federal capital gains. If you're in a state that has state tax, you have state capital gains. Then you have what's called depreciation recapture, right? Over the years, your CPA has been depreciating the asset, so you recapture that. And then you have what's called net investment income tax, i.e. Obamacare. So here's an example. You live in California. Whew, man, big time taxes, right? You bought an investment property for $1 million and recently sold it for $2 million. So what are your tax liabilities? So in California, the capital gains tax is 13.3%. On a conservative level, the federal capital gains tax is 15%. The depreciation recapture is 25%. And then Obamacare net investment income tax is 3.8%. Add that all up, and you're well beyond 40% just for selling a piece of real estate in California. I just sold my property and I want to do a 1031 exchange. My money is currently sitting in my checking account. Where do I start? Oh my God. It's over. You cannot do a 1031 exchange. You have disqualified yourself from doing a 1031 exchange because you have received the proceeds from the sale. Having the money go into your bank account, just know this. What is the most important thing I need to do when I do a 1031 exchange? It is hiring a qualified intermediary, getting that third-party person to hold the funds for you so that you're at least at the starting line to finish this race. Here's another question I get. I just sold my property. My friends are currently at my QI, but my daughter has a wedding coming up and I need to pull some cash. Is my exchange blown or disqualified if I don't use all the proceeds? There are several things in this question that you need to be made aware of. Number one, qualified intermediaries have rules. Some of these QIs will not release any of your funds for the full 180 days. So when you sign a contract with a qualified intermediary, you want to read that fine print, because in the event you need to pull money out of your exchange, they are not going to give it to you. They're going to hold it for 180 days. Why? Qualified intermediaries don't make money on the little fee they get from you. You know where they make their money? They make their money from the deposits. It's called sticky money. So the banks are going to give them a certain interest rate on that money. So the longer they hold your money, the more money they make. So you need to be careful that when you sign that contract, you're not dealing with one of those qualified intermediaries. But to answer the question about your exchange being blown, no. If the qualified intermediary that you have chosen does allow you to pull funds out, you're just going to have to pay taxes on that portion of those proceeds. I mean, I love that term. We got t-shirts that say swap until you drop. Call us if you want one. We'll get you one. But here's what it means. 1031 exchanges is a wealth building tool, meaning you can buy and sell, and constantly kick the can down the street called taxes. But what has to happen in order for you to never pay the taxes is you're going to have to die. And so your heirs will get a step up in basis and get everything tax-free. That's why it's called swap until you drop. A 1031 exchange does more than just defer capital gains taxes. It also defers net investment income tax and depreciation recapture. If you're planning for your future and you want to avoid taxes, understanding how 1031 exchanges work can make a big difference. At 1031 Crowdfunding, we offer investors a state-of-the-art online marketplace of alternative investments focused on tax deferral. Our team will walk you through each step of the due diligence process. Our portal allows investors to explore and invest in institutional quality real estate. You can build a custom blend portfolio to evaluate potential returns and optimize your strategy. Our goal is to make the investment experience simple and efficient so that you can invest with confidence. If you found this video helpful and would like more information, register for a free account at 1031crowdfunding.com or give us a call at 844-533-1031.